Hey everyone, how's it going? My name is Richard Moglen. Welcome back to the Stock Market Outlook video sponsored by MarketSmith. And this was not a great week to be a growth stock trader or investor, myself included. A lot of my stop losses were hit, and currently I'm actually sitting 100% in cash. And first, take a look at the NASDAQ briefly in MarketSmith. You can see that this week we broke that 10-week moving average, this red line right here, on increased volume versus the previous week. And overall, we had a pretty poor closing range, and really the expectation from this bar is sideways or lower, but obviously we have to react, not kind of predict. Also take a look at the SPX, the S&P 500. It has a very similar bar, although it is a little bit stronger. And going to a daily, it is just above that 50-day, I believe. And there you go. You can see it's 0.1% above the 50-day SMA, but really the expectation from this daily bar is sideways or lower. And if we go to a 5-minute chart, look at the selling the last just 15 minutes really of the market. This really kind of outlines the thought process that last hour, which is very, very important. So keep that in mind. And in this video, we'll go through the market indexes more in depth in TC2000. We'll talk about my current holdings and how I traded this past week. Then we'll review my previous focus list, talk about sentiment, and finally wrap things up with the IBD Big Picture article. So let's dive right in and start with my trades from this past week. And overall, I was stopped out of all my positions. DocuSign on this Monday broke expectations, really. The gap down, I was stopped out right near the open. NIO, a very similar story, kind of gap down here. I moved through this low, and I was stopped out right at 53.99. And moving on to SI, you can see that on this Tuesday, I basically sold out of my ads right at the open that I put on this previous Friday against this previous close and near the open here. But I still had a very reasonably sized position going into this Tuesday. And this was an interesting day and something that I think I'll remember for a long time. This day on TC2000 says it opens at 105. However, in real time, that's not what I saw. I saw it opening, if we go to TradingView, at about 140. And I had set my kind of max pain stop loss, what I was willing to give back at 117 to give it room to work over here. But this was a very, very vicious bar and really sold off hard the first few minutes. And it actually went right through my stop loss order in Vanguard. And once I noticed that, I put in a market order there, but that didn't trigger until around 105. So there's definitely, I'm still talking to Vanguard to see what happened, but there's definitely a few things I think I should have done better. Waited until the end of the day to see how it reacted. That first sell-off was very, very vicious. And even if it did hit my stop loss, I should have looked to buy it back on this very, very powerful rally here. So if you go intraday, it actually does open at around 135 or so. And you can see my stop loss didn't trigger around here. And then we have capitulation on this day, this bar here rather. And you can see there's about 300,000 shares traded in this 5-minute bar and just rockets up right from there. So even if I was stopped out, I should have recognized that this was a potential reversal here given the volume and bought back in, even if it was higher than my cost. However, in the meantime, in real time rather, I was pretty frustrated and kind of confused about why my stop loss order didn't go through when it went through the trigger price. So it kind of knocked me off my game a bit. But overall, I think there are a lot of learning lessons with this trade. I don't think I should have had such a large position size given the kind of iffy market conditions, just based on my own personal risk profile. And I also should have kind of controlled risk using that position size rather than a stop loss, because this stock does have a character of very large intraday swings and then huge reversals back to the upside. So a lot of learning to be done here, but I think this is still a very, very strong stock and a promising industry. And to me, it's just kind of basing normally here, even though it did drop so significantly from its highs. So if it does tighten up and present another buying opportunity, I will be looking to get back into SI. So I hope you guys get something out of that trade and hopefully learn from my mistakes. I'm still talking to Vanguard, so hopefully we can see what can be done about that stop loss order. But regardless, I have to take responsibility for my own personal trading. So moving on, we've got TDOC, and like NIO and DocuSign, I was stopped out on this Monday of the rest of my position as it really broke expectations. You can see it's a 3-bar break to the downside. And really, this chart does not look great. You can see it fell and gapped down the next day, found support for just 2 days here at this kind of prior base high, but now it's back towards the middle of the base in just a few short days after reporting not the greatest earnings report. So you can see I've got these boxes here. That's because if you go to a volume at price, you can see there's a lot of volume concentrated in these areas and down here as well. And lastly, we've got the trade desk, and basically this day hit my raised stops, broke expectations, and I was out and successfully avoided this gap down. But I still will be watching this because it has found support right at the kind of low of this prior base. So we'll see if you can kind of move up the right-hand side here, tighten up, and present new buying opportunities after the market pressure has somewhat lifted. And I did try a few things intra-week and intra-day that just didn't stick. Skills I tried a few times, was stopped out for a small loss. DDD I've also tried. I also tried, I think, on this day. Didn't really get enough traction to hold it overnight, but I'm still watching these type of stocks. So that's a quick run through of my trades. Definitely this SI trade will be something that I learn from going forward and hopefully improve as a trader. So now moving on to the market indexes, let's go ahead and let's get the flagged ones up here. So starting with the QQQ, let's take it day by day here. And first of all, this Monday, we had a gap down and then a close right near the low of the day and also below this channel that I drew in between the kind of highs here and the lows here. So this was a bad day. A lot of growth stocks were hit very, very hard. But then on Tuesday, it was kind of a mixed day, meaning we gapped down, moved all the way down here. A lot of growth stocks were down 10, 15, even 20%. But then we recovered very, very strongly just shortly after the first 10, 20 minutes. So I didn't quite know what to expect after this day, and we actually did have a positive day here. We gapped down, once again, recovered strongly. But then this day really broke expectations once again and suggested that we might be in for a longer basing period. And actually, I think this is healthy because if we had gone right back to all-time highs after such a quick move, that would be very volatile and very kind of out of character. So we need a correction. I think it's healthy to have a rest during this short-term, very strong uptrend within this overall bull market. So we have to remember that corrections and pullbacks are healthy and they set up new opportunities when the next uptrend comes. So this bar right here closed right near the lows, but held this low, which is a positive. And then Friday, we tried to move up once again, but had a pretty poor end to the day. If we go to a 5-minute chart, I showed this in MarketSmith, but look at all the selling pressure here towards the end of the day. And going over to the weekly chart, you can see that overall we were down 5.1% on the QQQ. The weekly closing range was 18.4%. The daily closing range was 37.9% on Friday. And overall, the expectation for this bar is sideways or lower. And at this point, we are in a stage 2 uptrend because we are above an increasing 30-week moving average, but we are now decidedly below this key 10-week, which really suggests that we need a little bit more time to base and then potentially challenge these all-time highs. And moving on to the SPY, you can see that this week we were down 2.64%, so a little bit better than the NASDAQ. The week closing range was only 10.6%, and the daily closing range on Friday was 20.3%. And from this bar, the expectation is sideways or lower, and we are in a stage 2 uptrend, but once again, we're below the 10-week on this index ETF. Moving on to the IWM to get a sense of the small caps, you can see overall we were down 3.15%, but we had a better weekly closing range than both the QQQ and the SPY at 41.9%, and we had a pretty good bounce here from the lows, and the daily closing range on Friday was 62.4%, and you can see that the expectation from this bar is sideways or lower, although we are above the 10-week and 30-week at this point, so we are in a stage 2 uptrend. And moving on to the DIA, the Dow Jones, you can see we tried to actually break out into all-time highs, but then we're pushed down all the way to the 10-week here. But overall, we were down 1.69% with a weekly closing range of 8.8% and a daily closing range on Friday of 17.3%. The expectation from this bar is sideways or lower, but we are above a rising 10-week and 30-week moving average. Moving on to Ethereum, you can see overall we were down 31.64% with a weekly closing range of 6.9% and a daily closing range on Friday of 28.8%. The expectation from this bar is sideways or lower, and we are below that 10-week, but we are above a rising 30-week moving average. Next up, we've got GBTC, Bitcoin, And overall, we are down 23.81% with a weekly closing range of 16.7% and a daily closing range on Friday of 50%. And the expectation for this bar is sideways or lower, and we are above a rising 10-week and 30-week moving average. Moving on to the FFTY, the Innovator IBD 50 ETF, you can see that growth stocks overall were down almost 6% with a weekly closing range of 43.2%. So a decent bounce from the low here. And we had a pretty strong daily closing range on Friday of 94.3%. And the expectation for this bar is sideways or lower, and we are above a rising 10-week and 30-week moving average. Moving on, we've got SMH, the semiconductors, and overall they are down 5.65% with a weekly closing range of 34.9% and a daily closing range on Friday of 57.6%. We are above a rising 10-week and 30-week moving average, but we are expecting sideways or lower from this weekly candle. And next up, we've got GLD Gold, and this also had another bad week, down 2.72% with a weekly closing range of 16.9% and a daily closing range on Friday of 36.4%. The expectation from this bar is sideways or lower, and we are below a declining 10 and 30-week moving averages. And moving on, we've got the VIX, and overall we are up 26.76% with a weekly closing range of 67.4%. The expectation is higher here, and it just kind of shows that volatility has come back a little bit. And looking back, you do see very quick spikes here where volatility has increased and then kind of decreased the next week during the past few kind of pullbacks and corrections. So keep that in mind. We could fall here on the VIX next week. And lastly, we've got the XLF, the financials. Overall, a pretty bad week with a very poor closing range, but overall only down 0.31% with a week closing range of 8.9%. The expectation from this bar is sideways or lower, but we are above a rising 10 and 30-week moving average. So overall, looking at the indexes, a lot of negative bars here, breaking key levels, the 10-week, but overall we are still above rising 30 weeks on all of them. So keep that in mind. The indexes are seeing more distribution. You do see a pickup in volume here this past week. So it isn't really a time, in my view, to be very, very aggressive. There will 100% be another uptrend, but in my view, we need a little bit more time to move up the right-hand side of those bases and set up constructively with some tight price action. So moving on to the previous market leaders, you can see a lot of them visually are below the 21 EMA and 50 SMAs, but we do have a decent amount of green checks on this past Friday. And sorting by the weekly change, only 2 were green on this week. We've got DQ and apps, and many of them were down 8, 10, even 20%. So they were hit very, very hard. Going through the charts, let's start with DQ, and let's go back to this main chart here. And overall, it found support at the 50-day and has bounced and tightened up a little bit on the right-hand side. So it definitely looks pretty decent. I don't know if they reported earnings on this Friday or not, but overall, this is holding up reasonably well. Moving on, we've got apps, and this is holding up very, very well and definitely pretty high up on my list of buys once we get a kind of confirmed uptrend once again. And Friday I had very strong action, and this was a pocket pivot volume signature here, and it had a nice bounce on this Tuesday, consolidating for Wednesday and Thursday, and then a nice move on this Friday. DKNG also had a nice move on Friday, and it did report earnings with pretty strong revenue growth, if I remember correctly. Great volume coming in on Friday, and definitely this looks pretty good, right below all-time highs. Looking at CELH, this also looks pretty good. So a lot of these near the top are definitely showing some RS, and overall it held the 50-day pretty well, but is kind of building out a base here below this high at 70.66. Moving on, we've got Snap, which had a very, very strong bullish outside day on this Tuesday when a lot of growth stocks reversed after the initial sell-off, and then has since kind of pulled back, but did find support at the 21 EMA on this Friday. Moving on, we've got Etsy, which also reported very strong earnings on this Friday, great volume coming in. So I would expect it, once the market pressure kind of comes off, to continue with its strong uptrend. Moving on, we've got Upwork, which also reported earnings on this Wednesday, but I don't like the reaction to its earnings because it gapped up, but then finished right near the kind of low of the day, but it has held a 21 EMA, so it is showing some RS, but I don't like this reaction to earnings. It kind of shows you that institutions kind of took that liquidity event and used it to sell some shares down to here. Moving on, we've got EMPH, which is below the 50 SMA. It looks pretty poor, but overall has moved up strongly since this past Tuesday. Pins also moved up strongly on Tuesday and has since kind of pulled back right to the 21 EMA, and nice upside reversal action on Friday. TSM pulling back to the 50-day. Not too much volume in here, although you do have above average volume days on Tuesday and Friday, although those were kind of upside reversal action days. So not the worst trend here, and this has been a leader in the chip space. Moving on, we've got FETCH, which did have a nice upside reversal on this Tuesday, but then pretty much went sideways and had an oops reversal on this Friday on good volume. So looks pretty good, holding that key moving average. Twilio also holding the 50-day, which is pretty good. Skills right in between the 21 EMA and 50 SMA. Not too much volume on the sell-off, which is pretty good. That's a good indication. And this day, even though it was red, had a very good closing range here and was an upside reversal day. Next up, we've got Zoom, which kind of broke expectations here. And I was looking to get back in through this high, but this Monday, it moved down and moved all the way down to 370 from a peak here of about 450. So this definitely needs a little bit more time to build out right-hand side. But if it can retake that 50 SMA, I think that definitely is a start. Moving on, we've got Crowd, which is below that 50 SMA, but isn't yet kind of living below it. And overall, these bars are pretty good. A lot of tails on this Tuesday, Wednesday, and Friday. This day wasn't the best, but overall, these 2 days, which are the most positive, were on above average volume. Next up, we've got Zillow, which is holding above the 50 SMA. You do have a decrease on above average volume steadily the past few days, but this day right here had good volume, and it is holding that key moving average, the 50 SMA. Moving on, we've got TTD, which we already talked about. Zscaler, not the greatest action on Friday, but it is holding near that 50 SMA. Net, decidedly below that key moving average, but it is kind of basing here at around 70. Fiverr holding that 50 SMA and right near that 21 EMA, but you do have two big decreasing days here on volume on Monday and Tuesday, although you do have nice upside reversal action on this Tuesday. PDD is pretty close to that 50 SMA, but is below it. Corsair, still building out this base here, but really nice upside reversal action on this Tuesday, but did decrease kind of to end the week here down to about 35.94. Tesla, the old king, is still below the 50 SMA and doesn't look too great. And look at the RS line trend here. But overall, it is holding above this kind of prior consolidation area. So if it loses 600, I think that would be a very, very bad sign. And overall, it is about 30% deep from its prior all-time high. So it could start basing out here and set up once again. But really, I don't like how it's below all those key moving averages. And you do have the short-term ones, the 10 SMA and 21 EMA, curling down above price. Moving on, we've got XP, which is holding up relatively well. You can see there's not too much volume on this sell-off. And overall, it is holding above that 50 SMA, is actually right near the 21 EMA. Peloton doesn't look great. It's basically round trip from my initial buy point. And I sold out here and here on these 2 days. But overall, it is holding 120 so far. And I definitely want to see it hold this bottom of the base at about 91. And really, if it pulls back that far, that's a pretty bad sell-off. But so far, let's see how far it is from its high. It's about 35%. So once again, it might be time to start basing here. But you have to keep your kind of mind open to all the different possibilities. Moving on, we've got Melly, which is below the 50 SMA. You can see these sell-offs have pretty high volume here. And this day was higher, but doesn't do much to recoup the losses from these 4 days. Moving on, we've got SC, which is holding that 50 SMA. Not huge volume on the sell-off, which is a good sign. And pretty good upside reversal action on Tuesday and Friday. Moving on, we've got NIO, which we already covered. It's back near kind of the center of this prior base. Roku is pulling back below the 50 SMA, but is holding pretty close to that moving average, although you do see pretty high volume on these down days. Moving on, we've got CGC, which pulled back sharply to the 50 SMA. And there wasn't much volume this week, but we do have this very high volume down day on this Thursday, I believe, after earnings. MVCR, you can see broke expectations with this bar, undercut this low and all of this consolidation. And this day is on higher volume, but it still has a lot of work to do to challenge all-time highs once again. Looking at SQ, it sold off pretty sharply. You do have a high volume down day here as it tried to hold the 50 SMA, but it is now below that key moving average. Next up, we've got FUTU, and you can see it's actually holding up pretty well within this flag here. It's above the 21 EMA, which is a positive, but you do see some high volume days right here. Next up, we've got PGNY, which also looks pretty bad. I think they reported earnings right here, but overall, not a great reaction, very high volume, and it definitely is breaking expectations. You can see the RS line is basically vertical to the downside. Moving on, we've got DDD, which is holding up reasonably well. We did have a gap down on this Tuesday, but it is holding above that 50 SMA. And at this moment, it's about 37% from its all-time high. So pretty sharp here, but within the character of the stock, this is a very fast mover. Moving on, we've got GRWG, and this has pulled back below the 50 SMA, but overall, it isn't yet living below that key moving average. PLTR is kind of breaking expectations a little bit below those key moving averages, but it is holding near the bottom of the prior base here. So you could see some support at about 23.32, but definitely needs some time. And you can see a lot of down volume here within the past week. Redfin is also below the 50 SMA, but isn't yet living below it. But I don't like the look of this kind of steep down day on huge volume. FLGT pulling back to the 50 SMA sharply, not too much down volume here. UPST below the 21 EMA, but nice upside reversal action on Tuesday, and TDOC we already covered. So overall, not the kind of worst picture from the true market leaders. A lot of them are showing signs of life, especially on this Friday, and the ones up here are definitely showing better RS, and I'll actually be replacing a lot of the true market leaders this weekend, making sure that all the ones that are on this list are holding up pretty well and could be the potential leaders of the next uptrend. And moving on to my focus list, you can see that these were hit hard like the true market leaders, and a lot of them are potential true market leaders. But anyway, CELH tried to break out on this Monday, but pulled back below the pivots. SCDG never triggered the inside day and out here with the pivot at 329.74 and lost the 50 SMA, is now kind of forming out another base here. Zoom we talked about is now below the 50 SMA. Crowd we covered. AVIR is below the 21 EMA, but is holding up pretty well and is now about 20% once again from its all-time high. And you can see no real volume here on these two down days. You do see some selling on this Friday, so I do want to see it kind of tighten up once again, but I'm definitely still watching this one pretty closely. Next up, looking at NET, we already covered. ALGM broke expectations here and also broke the 50 SMA. Corsair we covered, Tesla we talked about, Peloton, NIO we covered, and lastly we've got LMND, which is also below that key moving average and never really triggered this pivot right here at 153.2. So that's a quick run through of my previous focus list, and a lot of them are hit very, very hard, but I'll be sharing kind of my relative strength list tomorrow in another video. So moving on to my sentiment surveys on Twitter, you can see we had a drop from 51.3% bullish to now 41.6% bullish. That's a good thing. That means fear is coming back into the market. Going to the put-call ratio, this indicates the same thing. We're finally moving up here, and this is actually the highest we've been in quite a while since really November. And move on to the bulls versus bears poll. You can see we're also below that 60 mark and decreasing and going in the right direction. And look at the name exposure index. Once again, this is decreasing to 85. That's a good thing. So overall, in terms of sentiment, we are seeing kind of fear coming back in, which is a positive. And moving on to the IBD Big Picture article, the headline is Stock Market Mixed as NASDAQ Rebound Fades, 3 top stocks trigger sell signals. And reading through, they discuss the sharp sell-off here, especially at the end of the day, but they do talk about how the FFTY outperformed as it was up 1.8% on Friday. And they discuss how they're shifting to uptrend under pressure. There's an increase in distribution days, and you do have some top stocks triggering sell signals. NVIDIA dropping 7-8% from the buy point, TDOC as well as recovered, and Tesla as well that we talked about. And overall, looking at their market pulse, current outlook uptrend under pressure, 4 distribution days on the S&P 500 and 4 on the NASDAQ. You do have some leaders up in volume, DraftKings, NVIDIA, Zscaler, but these leaders down in volume, Baidu, Focus Financial, and SciPlay. So overall, definitely a reason to be cautious here. And moving on to the Wishing Well blog, you can see it's still green since November 5th, but now we are a GMI score of 3 out of 6 on Thursday, and most likely on Friday, this decreased a little bit once again. So this could be turning red very, very quickly. So overall, my current view is an uptrend under pressure. Next week, I think, is very, very critical, and we could easily move into a market in correction if we continue to sell to the downside But also the leaders are showing a little bit of life. We do have some of them showing RS, especially in the kind of social media space, pins, Snap, Twitter. But overall, we'll see what happens. We don't have to predict. All we have to do is interpret what's actually going on at that time. So I hope you guys enjoyed this video. And if you did, please go ahead and leave a like down below and subscribe if you are new. I'll see you guys in future videos.